Bernardo Hernandez, the eVentures, and Johannes Bruder from Rocket Internet. See you. Thanks for being here.
Good morning, almost good afternoon. Thank you, all of you, for being here, and thank you, Johannes, for joining us. You are a German entrepreneur, serial entrepreneur, and now the COO of Rocket Internet, based in Berlin. You've been exposed for a long time to hundreds of projects, some of them very successful. Let's start talking a little bit about the common denominators of what is a successful project. When you see, a pitch deck, an entrepreneur, what are those intuition triggers that actually ring a bell in your mind and say, I've seen this before, there is a pattern recognition here, and this is going to be successful. What are those common denominators of a successful project?
Yeah, it's a very good question for the start. I think if one first looks at not the specific company but business model, it's for us three things. So most successful companies that I've seen, and also companies with business models that we like to incubate and where we like to invest, is business models that offer a substantial value proposition. So nothing marginal, but a substantial, pretty unique proposition to customers. It sounds trivial, but it's actually pretty significant. So for example, we invested in one company called Movinga. It's an online moving company, so you can go to the website, you enter how big your apartment is, and they will tell you a fixed price for moving all your goods from city A to city B, and they will show up. They ensure quality, it's a very simple, straightforward way to move your stuff between cities. And that is, if you think about how it is today, moving is still something where you take up the phone and it's very annoying. People have to come to your home and take a look, and then they offer you a price. So that's a substantial improvement. Second thing is that we like defensibility. So clearly we like businesses, and we see also success in spaces that are not too crowded in terms of competition initially. What happens later is a different question. And then for the third part, in terms of business model, there is a German word called bodenständig, which means essentially grounded. So we like businesses that are grounded in reality. Yeah? So that address problems that consumers have in their everyday life, but also that perhaps SMEs have in their everyday life. So this is kind of business model. If you would ask me about, for each company, the most important success factor is that initially the founders of the company have done everything themselves, so that they really learned their business. But then at the right point, they were able to hire this very strong second level. Because this very strong second level, like a group of really great people that the founders are able to attract and then retain, this is what gets you from a good company to a really big, amazing company. This is for me the key driver to scaling a company, is this second level of people. And that's tremendously difficult, because with those people you compete with basically the very best employers in the world. So that's companies who can do that after the first, second year, not before, but after the first, second year, they tend to play out very well.
So interesting. So solving a real problem that affects ideally hundreds of millions of people, scalable around the world, rounded to reality, meaning that it's a real problem, another problem that you create from nothing, and then the ability to create a team that can scale and work very effectively, with the founders. That's actually a really good point. Takes me to second question that I would like to ask you, which is probably related to this form building, attracting talent. In the US, you've been in California, you've been in San Francisco, and everything is happening there in the valley. Along, 101 or 280, you have $3 trillion worth of, innovation in value. And it's easy to hire, it's easy to see investors. You have a really good initial market, access to capital, access to talent, access to technology, and everything is happening there. In Europe, we are all spread around the continent. You live in Berlin, which it's becoming one of the main hubs with more than $2 billion in VC investment last year. But then you have Stockholm, and then you have Barcelona, and then you have Paris, and then you have Amsterdam and London, of course, and Madrid and Lisbon. Moving across those cities is harder. Access to capital is spread out. In Italian, it's also hard to move from the US to Europe because of this, different regulations across the countries. How do you see the ecosystem being different, the US versus Europe, or what are the challenges of building companies in Europe, and how can we overcome those challenges to compete with Silicon Valley?
Yeah, a great ecosystem for technology entrepreneurship needs, I think at least needs 5 components. And if you miss one, it will slow you down. It might not break you, but it will slow you down a lot. And I think this is also something we have seen in Europe. So obviously you need great talent. And this is founders, but also experts for technology and marketing. So you need talent, you need investors, you need large corporates, and you need universities. Yeah, so kind of this ecosystem that comes from these components, and I think most importantly, between the startups, the large corporates, and there's a dynamic around companies that might fail. So then you can go to a large digital startup. So you build a startup, it fails, you go to Google. You recharge for 3 years. You find a new team, you build a new startup. Yeah, so this is very
acqui-hires, they call it.
Yeah. But what I'm aiming at is we have great investors now in Europe. Mm-hmm. Yeah, access to venture capital, which has been a large issue, is not an issue anymore. Even though still, I think 80% of venture capital go into US and China, but Europe has improved a lot, and we have venture capital. We also have, I think, the talent. Yeah, and this includes both now experienced entrepreneurs who perhaps have already built their first company, could have failed, might have also worked, but in the end, this is the first kind of key experience that you need to do better the next time. So you have these experienced entrepreneurs all over Europe, not just Berlin or not just Madrid, not just London. They are everywhere. You also have great universities. Yeah? It's also probably not Stanford, but great universities. What is missing a little bit in Europe still is this corporate component. Mm-hmm. Like corporates that really go all into this huge disruption that is happening. So what you have in the Valley ecosystem, and they enable people to recharge after a failure. They are exit opportunities. They also invest in young companies for many reasons. And this is something where I think Europe is overall lagging still.
What do you think needs to change? Do they need to invest directly, creating funds? Because some companies are doing that. They're either becoming LPs to venture funds, or they're creating their own funds. Amerigo and Telefonica, for example, and do they need to invest directly into the companies? Do they need to be open to acquire? Many of them, they have done acquisitions that, most of them, they haven't been successful, and they say, oh, this model doesn't work. They don't know how to integrate, the innovation business model into the existing legacy business model of those corporations. They don't even know how to integrate the talent and make it work with the rest of the company. What do you think is the best way for that to change? I agree with you. It's a huge component, and until we do that, I don't think the ecosystem will be developed.
I think the most successful corporates that are now really seeing it both as important and urgent, like that really go all in, they're doing multiple things, and they don't focus just on doing selective direct investments or kind of investing into a fund, but perhaps they do their own incubator accelerator, they invest into a fund, they do strategic investments, and they also try to build companies themselves, probably with a joint venture with a VC fund or an incubator. We have also done that, and I think that is the right approach. You need to take it very urgent and important, and then try multiple things. There is no silver bullet.
There is no one try. I've seen, in my experience, I've seen how I call it the corporate magma of the existing corporations. It's very dangerous, and they can eat up alive. Any small team of innovators that come without jackets and wearing sneakers. So I think it's very important to protect them. from all of that. And sometimes even some of the companies are trying the model of reporting directly into the president of the company, protecting that talent, so they can maintain those principles and those innovating values. I think is very important too. So. So I agree with you. I'm not sure what needs to change. When we look for exits, and you probably see that too, it's really hard to find a corporation in Europe that actually sees, a startup, as something valuable to buy. And that needs to change. The corporate development, departments in large corporations in Europe, I think they need to start seeing the startups as possible targets and acquire. Google, Apple, and Facebook. They buy 80, 100 companies a year. How many does Deutsche Telekom or Telefonica buy a year? Startups.
I think, to be fair, that this change is happening, and most importantly, I think what you, from a corporate point of view, need to understand, which I think is very important for building great companies, is this incentive as an entrepreneur, and that is equity. So great entrepreneurs and it sounds simplistic, but it is case, if they build a company, it needs an option for they need to have the potential to become rich. Yep. And this is something that many corporates struggle, like setting up these incentives. They think in terms of very standardized incentive schemes, with a bonus and a fixed salary. So, but investing into a startup and possibly joint ventures also with startups and investors can set up, release these real entrepreneurial incentives. And that is, I think, the little boost that is absolutely required to build a great company.
Okay. I'm very optimistic, and I think it's happening, and I think it's going to happen more and more. I've seen changes already underway. What do you think are the main trends of innovation and investing? Like, are you looking into marketplaces, artificial intelligence? What are the things that you think, are you going to be putting time and effort because they're going to be disruptive or with great capital gains, potentially?
So that we can discuss an hour.
Yeah.
I think so. One area that is very exciting is B2B services for SMEs for a very simple reason. Now imagine Sunday evening, you're at home and you're ordering a pizza. You take out your app, or you're ordering sushi. You take out your app and it comes to you 30 minutes later. Now next morning, Monday, you go to the office and perhaps you need to ship some goods from port A to city B. Today, basically, you will have to pick up the phone or you write a fax, somebody calls you back, then you have to fill out a sheet. So it's the opposite to the same experience that you had an evening earlier. And I think what will happen is that the people who are increasingly spending their money online in their private life, they have the same expectation to do that when they come to the office. So there's a fundamental shift in how also employees want to spend corporate money, and that will pull on new digital solutions in the B2B space.
So it's B2B, B2B efficiency tools, SaaS tools.
Yes, it's an interesting space that we closely look.
Mm-hmm.
I think also the on a very broad term, vertical integration is a very exciting domain. So if you mentioned marketplaces, and for a long time, if you think about a food delivery marketplace where basically you just connect users with restaurants, facilitate a transaction, but ultimately the restaurant is responsible to get the food to the user. And you are in the middle, you're taking a cut, and for a long time this was supposed to be the end game in food delivery, but then the vertically integrated food delivery model came, where you also do the logistics. You have all the riders that go to restaurants and ship the food to the users. So this is an example of vertical integration. And why is that so powerful? Because ultimately you can unlock new restaurants that were unable to do their own delivery. Also great restaurants, basically. This allows you to, because probably consumers appreciate that the lifetime value is higher, you can spend more on customer acquisition also. So this sets off a whole new dynamic, how a new variation of a business model unlocks a new part of demand. So vertical integration, a deeper integration into the value chain, taking more responsibility for the customer experience is, I think, very exciting, and you'll see innovation in many markets there. And another thing that I think is very exciting are these new direct-to-consumer brands, also vertically integrated. So gone are the old days where you had a producer, you had a distributor, you had a retailer, and then at the bottom was a customer. Kind of new companies, similar to the Warby Parkers of this world, they do all of these things together. They produce themselves and then sell it directly to customers, yeah? Building a strong brand. And it's also very exciting to attack established
Anything on
markets.
fintech? What do you think is going to happen? Are you guys thinking or doing anything on that space?
Yeah, so also very exciting domain, especially nowadays, as on the demand side, I think the consumers have become much more sophisticated in terms of online, and the willingness to go into a bank has probably diminished a little bit more. So the unbundling of banks, where one bank offered loans and kind of a savings account and all these things together into specific solutions, is also a huge opportunity. And I think especially starting last year, this year, next year, we will see many exciting companies there.
Okay. What about exits? I mean, you guys are a public company. You know, valuations change a lot. I'm sure you can't say much about the details of the financials of all of that. But what is when you start a company, a big motivation for the founder is not only to change the world and to be driven and all that, but also to actually make money. From the perspective of the exits, you mentioned before that corporate development and acquisitions by corporations in Europe is limited. What are the options in Europe for a meaningful exit? What is in the US, the market is more dynamic, both on the corporate side and then on the IPO. When it comes to the exits, what do you think is the situation in Europe?
So structurally, the options are the same as in the US, I believe, but probably the weights are a little bit different. But I wouldn't encourage founders to worry about that too much. So my observation is that as long as they focus on building a great company and they manage to do that, the exit question tends to solve itself much more easily. And I think, yes, IPOs are an option, but as we see the corporates kind of facing the challenge of digital more and more kind of fiercely, that's also an increasing option. So I would kind of really encourage companies to focus on building the great company.
Building a great company, and
not think
the money will come.
You meet companies kind of pre-seed that share an idea with you, and third slide they discuss kind of how easy it will be to exit the company.
I mean,
that is.
To tell you the truth, that is true, but a very small percentage, like 0.04% of all the companies that get funded at some point, they actually make it to be over $40 million. So the chances of a big success are small. And there's actually a lot of companies that actually, they don't fail, but I remember a conversation in the Valley a couple of years ago with a large VC partner, and he said, most of my time I end up having to sell not great companies, but decent companies that unless I help them to sell the company, it will be very hard for the entrepreneurs to get an outcome. It's not a failure, but it's not a huge success either. It's that mid ground, that for whatever reason didn't get to be a big success. But we're in the US with a little bit of help from the VCs and even from the entrepreneurs, you can find an exit. That's hard to see in Europe. Based on my experience, you find all these portfolios where either they're a big success or the company is going to keep trailing there forever till either they close down or they just become an ongoing success without a meaningful exit. So I think from my experience, I think in Europe we have this big challenge of taking care of that mid part of the curve that is not the head of the tail and it's not the long tail, but it's this product that actually gonna do 1x or 2x for the investors. They don't become huge successes, and you have a few of those probably in your portfolio, where they don't become huge, but they're not a failure either, and I think many entrepreneurs, they actually find themselves in that situation where they would like to see a more developed market for exits. That is not necessarily to be. I mean, if you're a big success, of course, you don't have to worry about anything. But a lot of companies, they're doing okay. They're doing okay, and they just need help to become liquid, to realize the value creation in the equity that they've done over a few years. But I don't think in Europe, is very successful. What do you think about that?
Yeah, I agree. It becomes much easier the more successful you are. Of course, the easier it becomes also to raise the next round. But the structural problem that you address, that there is in Europe an issue with later stage growth investments, I think also that has been true, but it's also changing a lot. It's changing very rapidly. So, and I think in the next years you won't have the situation that good companies and great companies will not find funding. But what will continue to happen is that companies that basically cannot convince investors, even though the capital is there, that they won't be able to secure funding. That is the inherent part of this market.
Okay, perfect. We don't have time for much. Thank you for being with us, and I'll see you in Berlin.
Thank you so much.
Thank you.